You're listening to AI Prism from Seoul Economic Daily.
It's Monday, August 10th. Here's why global investors are paying attention to Korea today. Korea's markets just delivered a volatility story unlike anything since the financial crisis. A hedge fund's spectacular rise and fall is reshaping how Silicon Valley and Wall Street view AI infrastructure bets. Foreign investors are pulling back hard from Korean chips, even as household borrowing costs climb on global tightening. And the won just posted its wildest swings in over 15 years. Situational Awareness, the hedge fund run by 25-year-old Leopold Aschenbrenner, went from a $20 billion AI infrastructure bet to a forced asset sale to Citadel within a single month, even as Silicon Valley investors now court him for his private market picks. Korean household loan rates have climbed, even though the Bank of Korea has held its policy rate steady since May of last year, as global bond yields rise and domestic lending caps tighten. Meanwhile, the won's volatility this year has topped every year since the 2009 financial crisis. Situational Awareness's fund returned 439% through June, then dropped 67% in July alone, leaving it up roughly 80% for the year, even after handing its public equity book to Citadel. The fund still holds private stakes, including in AI chipmaker Source Foundry, where it invested a combined $500 million, and in a $5 billion stake in Anthropic. Korea's average mortgage rate rose from 3.87% to 4.36% over the past year, and unsecured lending rates rose from 5.21% to 5.72%, even as the 10-year U.S. Treasury yield climbed from 4.4% to as high as 4.7%. Foreign investors sold 5.9183 trillion won, or roughly $4.2 billion in Samsung Electronics and SK hynix shares in a single week, pushing Samsung's foreign ownership down to 46.63% from a 2026 high of 52.40%. The won swung an average of 47.0 won per month this year, the widest since 2009, after spiking to a high of 1,555.8 per dollar and then falling 139.7 won over 25 trading days to the low 1,400s. Korea's July employment and household loan data, due August 12th and 13th, will show whether June's 26th straight month of declining youth employment continued. So what does this mean for your Korea allocation this week? Earlier, we said the won just posted its wildest swings in over 15 years. That volatility itself is now a hedging cost investors need to price in, separate from any directional call on Korean assets. The foreign outflow from Samsung and SK hynix suggests some rotation risk in semiconductors, even as the broader AI infrastructure story, illustrated by Situational Awareness's continued private bets, stays intact. And rising household borrowing costs, despite a flat policy rate, are a signal that Korea's credit conditions are tightening from outside forces, not from the central bank itself. That's today's AI Prism Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Won IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.